So far, economists expect the German government's fiscal package to boost the country's economy in the coming year. However, doubts have emerged recently. On the one hand, the announced structural reforms have not materialized. On the other hand, the recent monthly economic data has been disappointing. So far, the fiscal package has not been able to provide stimulus to the economy because both the 2025 budget and the law on the extra budgetary fund only came into effect at the beginning of October. Before that, provisional budget management had constrained government spending. All this will change by next year. There will be special depreciation allowances for companies, partial relief from inflation-induced higher income tax, a reduction in VAT for restaurants, lower grid fees, and so on. These measures represent a financial relief equal to about a quarter of GDP. A much larger boost is likely to come from the special fund for infrastructure and increased defense spending. Spending in these areas may not grow as quickly as budgeted due to slow procurement processes in the military and lengthy approval procedures for infrastructure projects. In the end, we follow conservative estimates by German economic research institutes, which suggest that defense and infrastructure spending will still contribute 0.6% of GDP in 2026. Combining higher spending on defense and infrastructure with additional expenditures resulting from legislative changes, the total fiscal stimulus for the coming year amounts to approximately 0.8% of GDP. Further support for growth could come from the European Central Bank's decision to halve the deposit rate to 2.0%. We only see downside risks to our 1.4% 2026 growth forecast, as recently weaker economic data may lower the starting point for next year's forecast a bit.